Order blocks. We've all heard of them, but do you truly know how to master them? I'm Wendell, your mentor from Spektrades, and today I'll be showing you exactly how one of my past students, Tony, was able to make $1,000 using order blocks. And I walk you step by step on how you can also use order blocks to make your first $1,000. Without further ado, let's get straight into this video. Before we hop on the charts and go over a full top-down analysis on how we use order blocks, we have to go over the foundation of order blocks. Make sure you guys are taking notes right here and write down all these key characteristics in this full definition, core rules, and the time frames that we use and why it matters. So first, on the key characteristics, we have to identify our main order blocks. Our main order blocks are the bullish order block, which is the last bearish candlestick before a bullish move, and the bearish order block, which is the last bullish candlestick before a bearish move. As you can see right here, this is the last bearish candlestick, and then we see a bullish candlestick engulf this bearish candlestick right here. This is our bullish order block. And then for our bearish order block, this is a bullish candlestick that is engulfed by this bearish candlestick right here. This is our bearish order block. Always make sure you guys are taking notes right here, because these right here will be truly important. The definition of the order blocks is that order blocks are zones where institutional traders execute large orders, creating imbalances. Price often retraces to these zones to fill remaining orders. The core rules for the order blocks is that we look for large displacement after the order block forms. Then we confirm that price hasn't tested that zone yet, and then we often look for volume that aligns with the order blocks. The time frame that we usually use is the higher time frames for trend direction, and then we scale down to the lower time frames for precise entries. The reason order blocks matter is because understanding order blocks help you trade like institutions and not like the retail traders. As you can see right here, this is just a brief analysis of our bullish engulfing order block. As you can see right here, this is our buy side liquidity right here. Price will rally down lower to tap inside of a higher time frame zone, and then rally back higher to give us this breakup structure. And then price left our bullish engulfing order block right here. And then we're going to extend our Fibonacci. The entry for our order block, we will wait for price to rally down lower and tap inside of the 50% of our order block before price rally back higher to clear our buy side liquidity. This is our main bullish engulfing order block. The bullish engulfing order block is just one of the many order blocks. Make sure you guys click the link down below to join the free Spark Trading community, where I have a full course on all the main order blocks, which is about 4 to 7 order blocks. So if you guys want access to the rest of the order blocks, make sure you guys click the first thing down below to check out the Spark Trading community to get free access to that course. So now we'll go over on how to trade the order blocks step by step. The first thing we have to observe is our entry rules. We'll wait for price to return to our order block. That is one of our rules, is that we have to wait for price to retrace into our order block. And then we have to confirm the order block with candlestick pattern, either a pin bar, a engulfing, or rejection wicks. So right here we can see that this is a bullish engulfing order block. This right here qualifies as a good order block as our rules. And then for second right here, this is our stop loss placement. For buys, we'll wait below the bullish order block, and for sell, we'll wait to sell above the bearish order block. Then lastly right here for our take profit is that we are targeting next market structure or liquidity points, such as old highs or old lows, or we can use our Fibonacci levels to confirm our target. So right here, this is a bullish model for a order block, and this right here is a bearish model for a bearish engulfing order block. So as you can see right here, we already went over this one right here. Price went down lower and then rallied higher to give us a breakup structure. Then price pushed down lower and tap inside of our 50% of this bullish engulfing order block before price rally higher to clear our buy side liquidity. This right here is a brief synopsis of our bullish engulfing order block. And for our bearish engulfing order block, as you can see right here, price left this bearish engulfing order block right here. This is a bullish candlestick that has a bearish candlestick engulfed inside of it. And then price left this liquidity high right here, this internal range liquidity, and then price rally higher, clears that internal range liquidity, tap inside of our bearish engulfing order block to then rally down lower to clear our old lows. This right here is just two brief chart examples on how we use our order blocks. Before we hop to our top-down analysis, we have to understand how to apply our order blocks to the real live market. For a quick recap of the key concepts, order blocks are zones of institutional control. We use the higher time frames for structure and the lower time frames for entries, and then we wait for confirmations before we enter. The common mistakes that we may face are trading random candles with without imbalances, ignoring the higher time frame bias, or setting stop losses way too tight. As we can see right here, this is a beautiful market maker buy model on gold. As you can see right here, this is a beautiful market maker buy model on gold. We can see that price rally down lower and give us a liquidity sweep of these old lows right here, and then rally back higher to give us a market structure shift of this old high. Then we can see that price push down lower, mitigate this old order block right here, and then rally back higher right here. And on this pullback, we can see that price mitigate this old order block as well. And then we can see that price rally and give us a clear displacement, giving us a clear breakup structure of this old high. This is our breaker right here, this 1 minute breaker. And on that pullback, we can place our entry right at the old high of that breaker and our stop loss at the breaker low, and where we're targeting our buy side liquidity for a 1 to 3R. This right here is how we apply the order blocks in real life market. Right here is an example of our breaker block. If you guys don't know our breaker block or our mitigation block, make sure to click the first link down below where I go over all these order blocks. Now let's hop on the charts and you can see exactly our order blocks live. As we can see right here, we are now on the daily time frame on NASDAQ. We can see that price went down lower and give us a liquidity sweep of this old low, and then rally higher and give us a breakup structure of these prior old highs right here. Then we can grab our Gann box right here. Our Gann box shows us our discount and our premium zone. We want to see that price pulls into a discount array on the higher time frames before we can see that price rally higher to our old highs right here. Now on the 4-hour time frames, we can see that price push down lower to tap inside of our 4-hour fair value gap. After price has rallied down lower to tap inside of our 4-hour fair value gap, we then can expect for price now to rally back higher to come and clear our recent old highs right here. Now let's scale down even lower to the 15-minute time frames to see even more price action. Now on the 15-minute time frames, we can see that price had pushed down lower and tap inside of our 4-hour fair value gap, and then price had rallied higher to clear our old highs and give us a market structure shift. And then we can see that price has pushed down lower to mitigate this order block right here perfectly, and then left us this rejection block. And then we want for price to start rallying higher to give us lower time frame bullish structure for price to rally higher to come and clear these old highs. Now let's see what happens. Now we can see that price had rallied higher and give us a breakup structure of intra-range highs of this old high right here, this old candlestick high right here. So then we can expect for price now to pull back lower to mitigate this zone right here. So this right here is going to be our entry. This is right here, this is our bullish engulfing order block. We're just going to grab this whole range right here, press our entry right here, stop loss right at these old lows right here, and we're targeting prior old highs right here. Now let's see exactly how this trade plays out. And boom, we can see that price rallied higher and give us a lower time frame breakup structure of these prior old highs right here, and then give us a pullback, retested our bullish engulfing order block, and then rally back higher to come and clear our old highs right here. This is a clear example on how understanding order blocks will make you extremely profitable.